Welcome to a new video on my channel. I hope you're fine. Today I want to give you an overview about Redwire's full fiscal year 2021 financial results. And I highlight the first positive part. The internal investigation has been concluded and the company confirms that no material misstatements or restatements of previously filed financial statements have to be made, which is definitely really positive and I think the most important part from the whole financial results for all shareholders. The company also shared some business highlights. On the one hand, they said that the total backlog increased to 271.6 million. Something I'm not really sure why they say increased, because if you jump over to the investor presentation from August 2021, it states over there that they have around 280 million in revenue and backlog, sorry. However, if you jump over to the presentation from March 2021, they state over here that they have around 150 million of contracted backlog in this case. So maybe this is why they said increased. However, as they stated in the conference call, the contracted backlog is around 135 million, whereas the uncontracted backlog around 137 million is. Another highlight is the acquisition of TechShot, which is a leader in orbit manufacturing, biotechnology in microgravity and bioprinting needed for commercial space-based biotechnology, which definitely suits very well to the Made in Space part of Redwire. There's probably going to be some synergy over here. They also stressed that they contributed key technologies to 12 different launches, and also, which I find is really interesting, that they delivered the first of 3 pairs of innovative and patented rollout solar arrays, ROSAR, for the ISS, and these ROSARs are expected to increase 30% plus in aggregate power. So if this really will materialize, then I think this is really good and might be used in different space stations or maybe shuttles or whatever is needed right here. There are a little bit more business highlights, a few of them you can have a look at it yourself. The last part which I wanted to stress is the delivery of the first set of wired cameras for the Artemis 3 Orion camera system, which is for the NASA's Orion spacecraft, which I think is always good if you have contracts with NASA. I think this is a good sign that the company is a state of the art. So now coming over to the financial highlights. As you can see, the revenue has increased to 37.6 million, and the adjusted EBITDA was 1.3 million, whereas the net loss was 61.5 million. And if you jump further down, there is even more information about the fiscal. No, there we go. Fiscal financial overview. As highlighted over here, this increase in revenue was primarily due to the newly acquisition of businesses, and almost 33 million of the revenue was contributed by these newly acquired companies. So this is something to keep in mind, especially if you jump over to the initial investor presentation. For the revenue projections, as you can see over here, they projected around 163 million for 2021, and they achieved right now around 84% of this. However, if you don't count in the revenue from the acquired companies, it's only 64%. So something to keep in mind, and I think that the company didn't really calculate with that many acquisitions, and therefore not that much revenue from these acquisitions. The company also got asked on the conference call why the revenue was lower than expected, and the company named a few parts. On the one hand, the continuing resolution negatively impacted the timeline of a lot of projects, and therefore revenue could not be taken in 2021. The other part, definitely Corona or COVID, has negatively affected the project in general, and also the supply chains. And also one part was that the human landing system was awarded singly to SpaceX, which was a surprise in the industry, I think the management said during the call. And this, or if Redwire would have been part of the team who got the contract, then there would have been, on the one hand, direct revenue and also growth in the future years. However, he also said that there might be hope that there's a second team which also gets a different contract for the HLS. And they have different bids with different teams, so they are positive to get at least a part of the revenue from this project. Another part I want to highlight is that the general part of the expenses has been quite high. So almost 66 million more than the year before. This is, as I said, mostly due to the increased cost associated with taking the company public. So this is normally a one-time event and should reduce in the future again. Unfortunately, I was not able to find any details about the costs associated with this part. I only found the transaction cost in the initial investor presentation, which was around 20 million. So it's still well above these numbers. So it will be interesting to see what these numbers will be looking like in the future. Another point I also want to mention is the increased interest expense. As you can see, it's increased by 5.4 million. And the reason was the new credit facilities entered into with Adam Street Capital. So if we jump back over to the financial highlights, they stated over here that they have an upsize of the revolving credit facility from 5 million to 25 million to provide enhanced liquidity. And this was performed on March 25th. So if you have a look down, in the beginning they had only 5 million, and then they had interest expenses of 5.4 million, which is quite high. So I'm not really sure if they already calculated in some of the new credit facility or not. And if it's not the case, then these interest rates will rise dramatically in the future, I think. So something to keep in mind. Now if we jump back over again to the comparison for the financial numbers of 2021 to the investor presentation, and as you can see, I mentioned before the revenue, which is at least not that far away. However, if you have a look at the adjusted EBITDA, they projected to have around 20 million in adjusted EBITDA. They only brought in 1.3 million adjusted EBITDA, and as I mentioned before in a different video, I'm not sure if adjusted EBITDA is that important of metrics. However, they provided the free cash flow, and it should be around 17 million. However, during the earnings call, the management said they won't be providing any infos about the free cash flow. However, it should be easy to calculate by dividing the adjusted EBITDA, by taking the adjusted EBITDA and subtracting the R&D costs, which equal around the amount of the capex in general. And this should be around 4 to 6 million, the company said. And if you jump over to the investor presentation, you can see on page 8 that the amount of research or amount for research and development was around 4.5 million. So if you now subtract this number from the number over here of the adjusted EBITDA, then we have a negative free cash flow of around 3.2 million. So not, as you can compare it over here, it's quite a difference between these two numbers. And as I mentioned before, they won't provide it in the future any numbers about free cash flow. So this is another small red flag for me, so keep this in mind. And then also, if you jump down to the presentation again, on page 5, they also have a part about the liquidity. Mentioned before, the upsize of the credit facility from 5 to 25 million, and at the end of 2021 they had liquidity available of 25.5 million, so whereas 20.5 million is cash and 5 million is the credit facility. So keep this in mind. If there's free cash flow of around 3.2 million for 1 year, so the cash at hand is not that big, and the company states that they believe its existing sources of liquidity will be sufficient to meet its working capital needs. So this formulation, in my opinion, the beliefs, is a bit soft to me. So there might be some dilution coming on, depending on how you think. And this is also something they stated in the next paragraph. Redwire plans to raise additional capital through one or more of these funding activities. And these funding activities are over here. So on the one hand, credit facilities, new financing arrangements, or maybe also the issuance of additional equity or debt securities. So this would lead to dilution. So keep this in mind. This is another small red flag in my opinion, especially with only 20.5 million cash in hand. Now let's have a look at the guidance. And the company expects sales to be in the range of approximately 165 million to 195 million. So, and also there's also the sales which are highlighted, because why didn't they just put in the revenue? Because in my opinion, sales is softer, so sales could also be contracted backlog in my opinion, and it doesn't have to be revenues right now, so it would be enough to have a sale, and the money doesn't have to be sent within this year. So keep this in mind. Or maybe it's just misunderstanding, or maybe nitpicking of my side. So however, if you still compare this to the numbers in the initial, or in this case in the August 21 presentation, which is still the same numbers, however I like the way they presented over here. So 237 million is what they expected in revenue, and I think this was without the acquisitions that Redwire took. And then if you compare it, 165 to 195, this is around 70 to 82% of the initial expected revenue. Keep in mind, it's revenue. Maybe the sales, these numbers are sales, which might be different. So, and on the other hand, the adjusted EBITDA, pro forma adjusted EBITDA, is expected to be in the range between 8 and 15 million. And if you compare it to the numbers, they projected around 32 million. And this is adjusted EBITDA, not pro forma adjusted EBITDA. So it's quite, well, at best, less than half of what they projected. So these two parts also, just again, smaller effect. Keep this in mind. So the market reaction to this was pretty bad. As I can see here, I took a screenshot. The company was down around 30% in one day, which I really think was pretty hard. And even though I also think there are a few red flags, I didn't expect it to to be down that much. So to sum it up, I think there are a few smaller red flags or something to keep in mind, especially on the one hand, potentially upcoming dilution. On the other hand, these softer formulations like sales instead of revenue, former adjusted EBITDA instead of adjusted EBITDA, then giving numbers about free cash flow over here on August 21, and then afterwards, a little bit more than half a year later, they said they won't be giving any free cash flow numbers. So this is a little bit odd to me. And also these different numbers from interest expenses, keep this in mind, and also the lower revenue, I think, is not a lot which the company can do, because the negative impact was out of their control, in my opinion. However, it's important that they can get a lot of backlog again and also a lot of revenue. And interesting what the company will be in the future and what their revenues will be. So I will be following them along, and would be interesting to hear what you think about the company and also the reaction to this earnings call. So put it down in the comments. Interesting to hear from you. And then until next time, have a good day. Bye bye.